daily candle close will tell us the direction of Bitcoin, possibly not only for the next few weeks, but possibly for the next few months. Let's get into it. Welcome back to Flex Candle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin. We're going to start from the higher time frames, work our way down to the lower time frames, and check to see if we find any good setups. Now remember, this is not financial advice, I'm just reading the charts. Alright guys, it's about 7:50 p.m. Eastern time. The price of Bitcoin is currently at 106,573. Let's start off here with the weekly chart. As you can see here, we have bearish divergence on the stochastics RSI. The RSI is pointing down. We're starting to roll over on the stochastics RSI as well, trying to see if we could do a double bottom. This could drag here for a couple of weeks. We are currently below the 21 moving average, which is at $112,509. We have about 2 days and 1 hour before this closes. I was telling you guys that last week we closed this red engulfing candle, which was tweezer tops. We have this very long wick, and I told you anytime we see a very long wick like that, we usually come down to eat it. Look over here, this example, we had this long wick. Look what happened the following week. We came back and we ate the whole wick. Right now it looks like we're doing the same thing. We were lucky to bounce off this 50 moving average, which is at 101,738. But remember guys, if we close below the 50 moving average, this could be the beginning of the bear market. Now will the bear market last as long as it usually does? Maybe not, or maybe it can. It's hard to say, but we're definitely going to probably be under for a while before we could recover this. Now the last time that we lost the 21 moving average on the weekly was over here back in March, February, when we went down to about 74k around there. And as you can see, we lasted about 2 months underneath the 21 moving average. We never lost a 50. They scared us here with this wick, but it took 2 months to get up here. So if the same thing happens here 2 months from now, we're probably going to be sometime in December. Maybe we get a Santa rally into the New Year's, but it's looking tough for October and for November unless we get some crazy news, some catalyst that just spikes us up. We take a look at the other time frames. The 6-day time frame, we're rolling over. This is bearish. We lost the 21 moving average as well. The 5-day, we are rolling over as well. The 3-day, we are rolling over. The 2-day, this closes in 8 minutes from the time of this recording, and as you can see, we're losing the 100 moving average. That's at 107,567. The next line of defense is the 200 moving average at 96,884, and that would bring us below the 50 moving average on the weekly. But again, we could come all the way down to the 80 moving average, and as long as we could close above the 50 moving average, to me the bull market is still intact on the weekly. Now the daily chart, this is what I'm not liking. This is why I was telling you guys this is a possible head and shoulder pattern, and the measured move to this is a little sloppy, but pay attention right here. Left shoulder, head, little right shoulder. This brings us all the way down to about 93,000, 91k. It could possibly even take us as low as 86k, depending on where you want to put your measured move. So far it already broke the neckline. We're about to close in about 7 minutes, and it looks like we will be closing under the 200 moving average. Once again, long wick on this day on last week Friday, and ever since then we ate up this wick pretty much. Now we have another wick here. So what we need is for us to even if we close here underneath the 200 moving average tomorrow, we need to have a green candle at least coming back up, maybe do tweezer bottoms that maybe we could come back up. The stochastics on the daily are still not resetting. We're still rolling over here. So we get a couple of candles underneath here. Again, we might be here for a while. The last time that we lost a 200 moving average was when we went to 74k. As you can see here, look at all these days, 2 months, and then we formed the double bottom. That's when we were able to come back up. So high probability that the same thing could happen if we start closing candles underneath this 200 moving average. On the 22-hour chart, stochastics still have not reset. We're nowhere near the 200 moving average. That's at $115,406 for us to get back above that. On the 10-hour chart, this one's looking a little bit decent. Kind of looks like we want to start going back up, but look at here, we came up and then we rolled back down. So this could easily happen here. We haven't had no strength. Look here, fell down here. We never even made it to the top. We fell back down. This is not looking good. If we take a look at the 4-hour chart, yesterday I left you guys with a head and shoulder pattern. Left shoulder, head, right shoulder. I had the measured move taking us to about 101,850 around there. We went as low as 103,500. So we didn't hit the exact measure move, but we made most of the measure move. So that's a winning trade. I don't really like shorting Bitcoin, but whoever took that, congratulations. That was definitely a winning trade so far. And like I was telling you guys, I felt like we were going to eat hit this wick, and as you can see, we fell down ever since then, and we might still have more to go. The stochastics are looking good. Maybe we could bounce up, but a lot is going to tell us what happens when we reach this 21 moving average at 109,825. If we get rejected off this 21 moving average, and unfortunately we're probably going to get down a lot lower and finish eating the rest of this wick. On the 1 hour chart, we are toppy. We barely got above the 21 moving average. It looks like we're about to lose this. Could this be an inverted head and shoulder? Maybe we make a right shoulder here and this could blast us up, and maybe we can make it back to the 100 moving average at 110. We could get back above 110. We could get back into that range between 110 and 120. That would be a lot more bullish, but as long as we stay below 110, right now we're going to be ranging between 100k and 110, and possibly even lower than 100k. And on the 15-minute chart, as you can see, we only got above the 100 moving average. Now we're losing it, and we're testing the 50 moving average. Stochastics are starting to reset. We need to get above this 200 moving average. I told you guys yesterday, unless we could get back above this 200 moving average, don't even think that anything's going to happen on the higher time frames. Look, ever since we lost it here somewhere around October 13th, that Monday, we've just been below. We have never been able to recover it. I'm hoping that this right here could turn into an inverted head and shoulder, and we could break back up and get bullish. Now, do I really think that we're going to go underneath 100? It's possible, but everyone is scared right now. Everyone is thinking that we're going to go lower. So knowing how manipulation works, they're probably going to do at least some type of bull trap before bringing us back down. I wouldn't be surprised if we get back to about 115. Everyone starts getting bullish again. A lot of people start entering longs on leverage, and then there is where they will bring us down beneath 100k. Right now it will be too easy because everyone's scared. A lot of people are shorting, so everyone's expecting us to go down. So I feel like we'll get a little rally at some point, but if we can't start breaking key levels, like we would have to get above 120 with strength for me to even believe that rally. If not, I would think it's a bull trap. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe, and if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.